Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Birttany Umar, and together we bring you Morning Call. So world markets are up again this morning, and they are with Asia continuing to lead. Our futures point to a higher open today after reduced fears in Syria helped lift us yesterday. So, Scott, can we attribute what we're seeing solely to talks in Syria turning more diplomatic?
I don't think so. I think maybe it helped with a little enthusiasm, but overall the markets rallying around the world started, in the summer, especially in the Shanghai, indice. You started seeing some data out of China, which started to negate the whole hard crash landing story that the bears were throwing out there. And more importantly, technically, you look at just say the FXI, because that's how some people do trade China. You look here, you'll see it put a double bottom in June and July. And from here, sometimes you have to figure out what's next. What happened next is you had a gap up, which is always healthy, especially when it holds above it and protects it. And then from there, you had a higher low, higher low, higher low, and then power, power to the upside, showing that, this could be real. You go to Japan, which has been a positive spot for the majority of the year, a little different story. You had a huge move heading into May. This was a pretty sharp decline, but in perspective, it wasn't that bad. And then it's been putting in this pennant type of pattern. You did get a false breakout move here, or breakdown, so to speak. So this is what you call a bear trap, or almost an island bottom, when you have shorts trapped here and guys that got stopped out of longs out of it, and then you popped right back in the range, and now here we are in continuation. I do think this downtrend gets taken out, and if we don't take out the May highs, in 2013, I only think it's a matter of time to take that out in 2014.
But all this did help us yesterday. Yesterday, the S&P reclaimed its 50-day and was able to pierce through its descending channel.
Yes, which are all positive signs. So when you're tactically trying to measure the incremental strength, you have to take these signs and you have to act quick. And yesterday we came in not knowing exactly what was going to happen. Okay, first of all, Friday, you had, that random volatility where you had the jobs number, and we, opened up and sliced through a lot of different levels, almost put an outside day in the first 30 minutes, but later we reclaimed it. So if you went out short over the weekend because of that scenario, or you went out short thinking we were going to have some kind of military attack, yesterday, you got a little caught, so you had to make a decision. What do I do? Do I roll it up and have conviction and say, oh, you know what, we're going to go to Dow 12,000 like some are saying, or this is 1987, which we don't have the signs of that. But anyway, if you came in as a trader, somewhat flat-footed like I did, I think I had a lot of risk down yesterday, and I put some positions on as it warranted it. And if you look at the SPX, you will see that overall, this trend actually held. Okay, it was a little iffy. Here's that November low. You follow this more intermediate trend. This is what held here in June, and we were hovering right here in August. It looked as if we could have broken it, but you know what, folks? We didn't. We actually wound up breaking this pivot to the upside. You take a closer look here on the micro navigation. Here is that small head and shoulders top where you could have taken some risk off. Side swiped 4.5% to the downside. Here is when we hovered on the 100-day. Look what happened here. This one was a little quicker. It was a 3-day hover. This time wound up being a 5-day hover. And then yesterday took back the 50-day, crossed above it. Now let's see if we could do work sideways here. So I'd say now, as long as we stay above this area, over the next few sessions, I think that we could take out the 2013 highs, and if we don't take them out before, the end of this year, I think it's only a matter of time in the first, second quarter of next year. But overall, pretty constructive action.
Well, President Obama will address the nation later today on Syria. Do you think that could potentially take us off track?
At this point, he's almost becoming a sideshow, and I hate to say it. When he had his Labor Day speech, he could have, done something then. He condemned everything, but then said, you know what, I condemn that, I condemn this. I'm not going to get political right now because people don't like when I do it, but then said, I'll let Congress decide. So he took the ball out of his hands. And now with Russia saying with Syria that, let's do it diplomatically perhaps, where we'll give you the chemical weapons. What's he to say now? No, we're still going to just strike to give you a message. So at this point, I think, stick with strong stocks. Maybe don't be all in, all out, but have some positions, have a hedge, and continue to use quick feet, because those who are using the quick feet right now, even tactically short, because there's been some of those are being rewarded on their P&L, and those sticking to the macro long-term plan, which we always talk about, keep doing that until you get to your golden years.
Well, speaking of strong stocks, as you mentioned, leaders do continue to lead, and some laggards are playing catch-up. And there's actually some breakout candidates like Chipotle, which is basing above its 8-day and looks like it could make a move higher.
Yeah, so what we want to do is we want to just give you more setups. You know, who cares about the macro conditions? CMG, like you said, has been acting very well, and it's hovering right near those 2013 highs. You take a look here. You know, this for traders could be something to make you some cash flow. Okay, a trade and close above 14. What is this? 14.13 could yield you a nice trade. So if you're looking for just a nice trade, you know, it's above the 8-day, above the 21-day, looking to break out above that level and holding above it could create some cash flow.
Yeah, let's take a look at some of these potential breakout candidates. Celgene is currently back above all key moving averages and is holding higher.
Yeah, and if you look at the chart here, there's a few things to like. You go to the chart, obviously the trend is really strong. Look at this strong trend. On the pullback, it did not even get to the 100-day like most indices. You look here, in a lot of our courses, we talk about the importance of gaps not being filled to give us clues on future direction, and then there you go. Above the 8 and 21-day, which we also talk about in our education on how smart that is, or how of a leading indicator it is for a breakout. So here you are. Sometimes you rest right in front of an old high, so I'd like to perhaps see a little bit of a sideways motion above the 8-day, but if not, if it takes out this pivot here, which is about 150, right, shorts get squeezed, then you can get that cash flow type trade.
Meanwhile, U.S. Steel just had a 3-day rally. Do you think that still higher prices are in store in the coming sessions?
This is a different type of setup. It's not a leadership setup. It's actually one of those names from the past that some think are quality, some think aren't. But overall, with China getting stronger, with with them saying, okay, now materials could be in demand, whether it's steel, whether it's copper, who knows? Look at this chart. You go here. Granted, I hate when it's 4 days into a resistance area, but overall, it's knocking on that door. So if we can get above this 1960, which is probably opening above this morning, and stay above it, you could see some continuation here. So this is a laggard catch-up play, but sometimes these could give you tactically good results, especially if you sold it here when it broke this little trend line, or sold it here when it broke this bear flag. You have the luxury of A, not sitting in it during this consolidation phase, and B, some opportunity for a potential move.
And it looks like Freeport-McMoRan could be setting up for a potential move as well.
Yes, and this one too. It's been out of play for the whole year, but with a strengthening world market story, to me, it looks like it could be something for cash flow. You look here at the chart, there's your downtrend. It's still coming off the lows. Look where, look where it is in the spectrum of the past 2 years. So it's been out of play. But again, if China does continue to strengthen, this could be perceptually seen as a catch-up play. And right here, if you got out of it here or got out of it there, you haven't had to sit through this noise. Here could be your technical, TBA, which is technical buy area around 32, about 32-ish.
Well, speaking of China, Chinese travel agency C-Trip has been building an upper level base, and with all key moving averages rising up.
And this one looks like a breakout candidate, kind of like Celgene. If you look here, it's actually consolidated above the 8 days. So just real quickly, sometimes these are tricky, but when they go above 48. That's a new high, and new highs usually come right in front of future upside. So it's for it to get to 50, it's got to get through here. So there's your buy area, 48.02. But when you play for momentum, one of the rules is when you play for momentum, if momentum comes in with volume, you go with it. But if it goes above that area and comes back below it and that trade doesn't happen, you have to have quick stops too.
Well, over in retail, what do you think about a potential setup in limited?
Well, this one I looked at, it's not a 52-week high setup, but it's something to look. And here, you had a really nice trade when it broke above this 53 back in July. Quick move, lost some steam when it filled this gap, but overall held higher. Nice day yesterday. This one has room between support and 2013 high. So if you feel like you want to buy, versus support, this would be an area. And then if it were to take out, just say 58.50, can get set back in motion for what could be a move back to the upside there. So this isn't a breakout trade, but you have a nice little triangle here that above this area, you could catch a middle and then a breakout, in the coming weeks.
Well, yesterday the bank showed some participation in the rally, which we like to see. We're going to go in the trenches with some bank stocks right after this quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, We teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with the bank stocks. We finally saw some participation in the rally from some bank names yesterday, and Goldman actually triggered the buy price that was listed on the price point sheet yesterday.
Yes, we were trying to see if the rally would have some kind of oomph that the banks would have to play a part in, and Goldman did break above, its little downtrend here. But if these things are going to make new highs in 2013, which some might not, you look here, it's on its way. This is actually what we drew yesterday on the chart, this area. So hopefully you got involved in a little bit around this 158, and if you did, you know what? It's got room all the way back to the old highs. So this bank is back in play. You don't really have enough, like a buy action area that was yesterday, but you could just play a trend that could continue back to these highs here.
Morgan Stanley also looks like it has room to make a move back to highs. It had a nice day with more than 2% of gains yesterday and cleared most resistance levels.
And this one looks almost closer to its 2013 highs. So you look here at Morgan, this was that descending channel here that wound up triggering to the upside. And here we are close to this area. So I think if one starts to go, a lot of them might start to go, and it's pretty close. 28's right there.
And Bank of America, we know Scott likes this one, tacked another 0.8% on yesterday. What do you think here?
Well, this one hasn't triggered yet. This one showed probably some of the best relative strength during the pullback, where if you look at the moving averages, you'll see here that it actually, only went to the 50-day, never got to the 100-day, and this is still nice and tight. So with that said, we've seen this many times with the stock where if you were using a tier system, here's a consolidation, broke out. Big time consolidation, there was a downtrend, broke out, did it again here, and now look how it's set up right now. So I am in some of this, and I think it's opening up a little bit today, but if it can clear 1455-ish and close above even 1470, you're going to see these 2013 highs taken out. And we've talked about how the highs of the year aren't in, and if for some reason they don't make new ones in the fourth quarter, I think it happens in 2014. But overall, this has been a great stock for the drawer, and here might be a nice little cash flow add-on trade.
How about Citigroup? Also holding higher. How constructive does this look for higher prices?
They all kind of look similar. They all have different setups. You pick and choose which one you like. Some people pick two, some people pick one. You look at Citigroup, it also looks, pretty good. Let's see here on the setup wise. This, I guess, I would say this is your area, okay? If it can get and stay above this little zone, this 50-20, then the highs come in all the way up here at 53. So, looks pretty good. Here's your trend, holding in there. Here's your minor lower pivot, so pop up here, then you have that little room area there.
But as a general rule, you'd say probably pick the ones that you understand the behavior the best, right?
Well, especially as a trader. They all trade differently. Obviously, Bank of America has so much more liquidity than something like a Morgan or a Citigroup that trade less. Then Goldman is like, higher price. So it all depends on, your strengths and what you watch closely, because, as a trader, you want to feel comfortable. As an investor, you want to feel comfortable. You don't need to be in 5 names in one sector. You pick 1 or 2, one maybe for the drawer and one as a cash flow vehicle, and at times maybe you own 2.
Right, but a few potential setups for you to choose from. So let's do some quick hits here, and one of the big stories of the day will likely be Apple, of course, after its big event. It's actually the first of 2 it has this week. How do you think the stock's acting heading into the event?
I think it's acting pretty well, and the question is, do they sell the event? Every time they have some kind of event, it's always tricky trading action because, the machines or whoever, want to take control. If you look at the chart, though, here, 2 different ways. First of all, remember this head and shoulders top right there? That was your sell signal. Then when it broke this trend line, another sell signal. And then here it comes all the way into the bottom end. All right, so in my head, I think it can get up to this 540-ish and fill this gap. If you take a close look here, it's been acting very well since earnings. We talked about this setup here where it gapped up, held it, continued, then it took back the 200-day, and here we are consolidating again above the 8 and 21-day. So with that said, it's up a little bit today. If it could get above 508, really your next level here is 513.74. So if it gets through today and they can't sell it down and closes above there, I think that road to 540 will come quicker. If they try and sell it off quick, I would say some probably will use this, this area as a stop. I would say, what is this? This is like 495-ish, 496. But let's hope it hangs in there and we get, some nice follow through into tomorrow.
How about Tesla? Lost some momentum yesterday. It did dip about 3.8%. Its action has been pretty choppy lately. How do you recommend playing it with that?
Well, a lot of guys were trying to say, Red Dog, what do we do? Should we buy this dip? And I was like, you know what? it's showing a little relative weakness. Why don't we at least wait to the 21-day? And some actually played it short and did okay. You look at the chart overall, though, it did not get to the 21-day, but came close. If you look a few different times, here it came to the 21-day and held. Here it, for one day broke below, but then reclaimed it with force. Here it held. So, we want to make sure the trend continues, especially if you approach it actively. So as of right now, here's your new point of reference. If you were playing for a cute little short setup below the prior day low, you got that yesterday. And now I just think, it's going to need some time to consolidate. If it were to get back above yesterday's high today of 164.50, it was short-lived. Then we missed our opportunity here to 21 days. So I think at this point, just keep it light with Tesla because, this upper area could be a little tricky, so I think we need more time.
All right. Potash had a nice day yesterday, nice gains of 5%. Do you see it being able to reclaim the 50-day?
Well, that's a lot higher. I think right now it's in the gap, so it's a good cash flow trade. Yesterday, you look at the chart here, a lot of these ags gapped up, so, I am actually in some of this. It did gap up above this lower pivot. It, seems like you can probably get another trade through this pivot. And then you look here, this is a huge hole. Big gap. Here's your 50-day. I'd love to see you work up to this in the coming sessions. This stock's been battered and bruised, and if you're not caught in this mess, which we weren't really caught in, this could be one of your, treasures for trash type of trade just as a setup.
Energy company USEC rising on some unusual volume yesterday. What do you think here?
Well, I think this is that uranium play, that had a big squeeze, a month ago. So some were looking for some type of volume burst, and we got that yesterday. Right. You look at the chart here, this thing has gotten annihilated. It's definitely a very, very speculative play. And you look here, this was the quick move it saw in July all the way up to 30. Yesterday, it held, where it had to. And now we'll see if it builds. I think some of us got involved. You'll see it on the virtual trade floor. If it were to get above this, 1486, it could see a quick move right back into the 15s. Overall, very speculative once again, but could be something to do if it trades above yesterday's highs of 1466.
And BlackBerry was actually able to lock in gains of 6.4% yesterday, depending on how well the Apple event is received today. Wondering what the effect could be there.
No, I thought it was a little bit more of like there's been like takeover speculation just
right.
because people are talking about what happened with Microsoft and Nokia, and then there was some talk, that Lenovo, whatever it is, there's a lot of different things that come out on a lot of different news services. But overall, technically, that's the reason to be in a name. And if you look here at the chart, I bought some options just, to put a little risk on here when it broke above this little area. Yesterday you did have a little bit of follow through. I think it's off a little bit today, and but it could continue. If people don't think that the new phone is anything from iPhone, anything blockbuster, maybe emotionally it can go up. There's a huge short interest, but overall I don't love it. I'm involved, but I'm doing it in a low risk type way.
All right. So overall, what is your advice to traders heading into the session today?
If you didn't get long Friday or you didn't get long yesterday, and you're looking to get long, we're up 8-9 handles pre-market. Just give it some time. If you've been rolling up your shorts and you're listening to all the fearmongers out there that this was 1987 or we're gonna have a 15% correction, this and that, that's why you don't have an opinion. You wait for the market to confirm it. What the market has confirmed is so far this has been a normal correction back to the 100-day, which was the same one from June. Okay, and now we're in resumption of a trend. How strong will this trend be? What type of participation? Every day we're seeing, some leaders lead, some catch-ups play catch-up. So today, look for some setups. Some people might want to short this open, and then that might work. But do it versus a level, not with opinions. Do it with a plan, and that's the way you could, keep those feet moving, so you could add to your P&L and, and stay the course.
And that's your morning call for this Tuesday. Happy trading. Have a great day.